All right, so welcome to Budgeting 101. Um, One of the very, very best bits about hosting these sessions and running these sessions is to be able to share the fact that you're doing it as small business owners, as specifically British small business owners. We're not very good at talking about finance and talking about money. And so I always encourage people within these sessions to take a little picture of your screen, of you at your computer, and share it, talk about it. If one of your goals for 2024 is to post more on social media, this is a great opportunity to talk about what you're doing today. Or if actually you want to use this as an opportunity to get people that you love and that you care about also talking about money, sharing the fact that you are on the webinar today is a great way of doing that too. So just my business owner marketing hat, use this as an opportunity to create content, but also spread the love and get other people talking about finance as well. This really is the lesson that we should be taught at school. If Accounting 101 was lesson one, which is sole trader versus limited company, how do we pay ourselves and how do we plan and save for tax? Budgeting 101 is actually lesson two. And so for me, a big part of what I do is teaching people the stuff that we are not taught at school. Sorry, I'm just need to adjust something on my screen because I can't see myself. A really big part of what I do in accountancy. If you are brand new here, if you've just stumbled across and found me on the internet, accountancy is a safe place for everybody to learn about finance, engage in finance, and fundamentally not encounter any barriers to entering the finance space and being financially educated. So we exist to increase the financial education of everybody that comes across us, and we decrease the barriers to entry for financial education. We do that for business owners by creating long and short form, completely free, consumable, accessible content. And then when people actually grow and scale their businesses to the point where they're ready to have an accountant and work with us on an ongoing basis, I then have StriveX, which is the blue part of my life, not the pink part of my life, where I have an incredibly rapidly scaling practice. We've got some clients on the call today. And so we recently hit £1 million. So we've scaled from a one-man band to £1 million practice in the last 3 years. I also exist to lower the barriers to entry to other accountants. I was a free school meal child and a charity shop kid. My parents didn't work in professional services, and so I encountered quite a few barriers to becoming an accountant, mainly because my parents didn't know people who could get me work experience, and actually not going to university was a financial decision above anything else. And so in 2024, in 2023, we launched a bursary scheme to fully fund somebody to become an accountant. And for 2024, we have actually 10x'd our commitment. And so this year for 2024, I'm fully funding 10 people who don't have access to financial education to become accountants. So accountancy exists to just be a financial safe place for everybody that we encounter. And through doing that, I get to do the weird, the wacky, the wonderful. I get to work with people like BBC News. I'm working with BBC News tomorrow to talk about national insurance changes. You'll see me lots in the press and in the news doing really incredible speaking events and sometimes doing glamorous things like winning awards. But again, all of this exists to get people who don't normally engage in financial education to get talking about finances. And so today we're going to go through analysing and forecasting your costs. When people think about budgeting, that's normally where they start, is the costs. We're going to go through how you can set income goals for your business. When we go through and analyse different costs, we realise that costs behave in two different ways. The first is a direct cost and the second is an indirect cost. So indirect costs are what they are, could be things like rent or your accountancy bill, but actually direct costs are costs that increase or decrease in line with revenue. And so actually once we've analysed our costs, then we can set revenue goals and then work out how that comes together. Then we can do some really cool what if testing, which is basically scenario planning. So this is the basic. As an accountant, I always do a doomsday budget to start with. So if the world goes to shit, what does this budget look like and can I still survive? Then we add on what if testing. So what if my social media strategy works? What if sales increase by 20%? What if I can double my sales this year? what if my quality of life audit tells me that I should hire someone? And so then once we've done the basics and we've analysed how different income and costs behave, then we can do what if testing. Then we're going to do a little bit of a chat around quality of life audits. And then I'm going to talk about how to ask for help. You won't come on this webinar and have all of the answers. You won't come off this webinar and be an accountant that loves forecasting and budgeting. And so actually, I just want to give you the right tools to ask for help if you need to at the end. As with every session that I do, I am trying to cover as much as possible in the fastest time possible so that we've got time at the end to ask questions. Please do ask questions. If you'd like to ask a question anonymously, using the chat on Zoom, you can actually, when you hit the chat button, it will default to send the message to everybody, but you can click on the blue bit that says everybody, and you can just send a message to me. If you send the message to me one-on-one, I won't read your name out when I read out the question, but if you are happy to ask a question publicly, please know that if you are thinking about a question, everybody else in the room probably wants to ask it and they're not brave enough, so we're brave. And then again, anything that I cover today, I have lots and lots of on-demand resources that are completely free to engage with. And so wherever possible, I use QR codes. Most of you guys are sat at your laptops. And so if I ever see you pull your phone out, I'll assume that you're scanning a QR code. I use QR codes because actually it's the best way to save it on your phone for later whilst continuing to engage in the webinar. So anything that I cover today that I've got more resources on, you'll see them on the bottom right-hand side of the screen. And so the first thing that we need to do when we're looking at pulling together a business for a small, when we're looking to pull together a budget for a small business is to zoom out. That is not an easy task. As business owners, very, very often we are in the business, we're not on the business. And so we need to zoom out. As somebody who my desk is my happy place and my desk is my very high productive place, if I'm trying to do this work, which I call the thinky doey work, rather than the doey work, like the tappy work. If I'm trying to do thinky doey work, I will actually try and take myself somewhere else, whether that is just the cafe in my gym or go for a dog walk before I start doing this. I really, really try and change my state before I come and do this work, because if I've just come out of an appraisal with a member of staff and I'm going straight into budgeting for the next 12 months, it's going to be whiplash for my brain. And so I'd really recommend, in order to zoom out, try and get some distance from the day-to-day running of your business. And so I'm going to walk and talk you through which numbers really matter when we're thinking about budgeting, but also where should you start. I am an accountant, but I think for things like today, the most important area of my life is that I am a business owner. I'm a business owner that has scaled a business very, very quickly through very intentional forecasting and budgeting. So over the last 3 years, we've scaled from 0 to a team of 18. We've scaled from a valuation of 0 to 1 million. We've done all of that without any external investment, without having to put any money into the company personally. All of that has been done through our own budgeting and forecasting. And so I think it's really important that I explicitly say to you, not all of that is done through very, very tight budgeting for the business. Most of it has been done through a really, really sustainable approach to what do I need from the business? What does the business need to do in order to give that to me? Because actually I am needed to get the business there. And so we're going to start by talking about a really, really interesting concept. And the concept that I'm going to just spend a minute or two talking to you about is actually something that's called the Odyssey Plan, which is literally a rocket. And the Odyssey Plan is a method that has been developed to really help people to navigate very, very big decisions. And fundamentally, the reason the Odyssey Plan exists is to answer the age-old question of what should I be doing with my life? That might not be a question that you expected an accountant to ask you on a budgeting webinar, but it's actually the most important question. And again, when we're talking about zooming out, it's easy as a business owner to zoom out and look at your business as it exists today. But actually, that is not the point of budgeting. Budgeting and forecasting is the thing that's going to take you from where you are today to where you want to be. And so in order to answer the question, what do I want to do with my life? The Odyssey Plan basically asks you 3 questions. I can see lots of people scribbling. If you're scribbling, write these questions down. The first question is to write out in detail. So this is a later question, not a now question. Write out in detail what your life would look like 5 years from now if you continue down the same path that you are currently on. So write down in detail what your life would look like 5 years from now if you continue down the same path. The next question is to write down in detail what your life would look like 5 years from now if you took a completely different path. And when I say completely different, your brain's probably immediately gone somewhere. Like as business owners, it could be that you think, I don't know if this is for me. What if I got a job in employment? Consider that option. What would your life look like if you took a completely different path from the path that you're on now? The second question is write out in detail what your life would look like 5 years from now if you took a completely different path. And the third question is write out in detail what your life would look like 5 years from now if money and social obligations were completely irrelevant. That's the juicy one. So what would your life look like 5 years from now if money and social obligations were irrelevant? I do this quite frequently, and I love it. I think it really, really helps me to stay on track. As business owners, sometimes you can feel where north is, and sometimes you can feel when you're like just a couple of degrees away from north. And this can really, really help to reset yourself, zoom out, get distance from the meeting that you've just come out of before you're watching this, and really look at redirecting when you're thinking about the future and you're thinking about the future that we're financially mapping. Actually, what future are we talking about? The second out of 3 very big life questions, and I'm hoping no one's going to cry during the budgeting webinar, is to do a Wheel of Life. The Wheel of Life is one of my favorite exercises. If you join lots of these webinars, you will have heard me talk about them before. I most recently spoke about the Wheel of Life in our How to Hold Personal Development Sessions with Your Team webinar, and the Wheel of Life. Sorry, Rebecca just put in the chat famous last words so that someone's not going to cry on a budgeting webinar. Wheel of Life is probably the best exercise for zooming out that I have ever encountered. We do it with every single member of staff to make sure that actually they're taking a holistic approach to work and productivity. James and I do them as well before we do any budget. And that is where we go through a Wheel of Life, and you can literally Google Wheel of Life and you can download loads of interactive templates. My top tip is if you use Microsoft, and I'm sure there's an Apple equivalent. I think you guys can see my whole screen, so you should be able to see. Yeah, you can. My top tip is to, if you use Microsoft, you can just use the snipping tool, and you can use the snipping tool to plot some answers on. So you can basically, you want to be scoring your whole life in all of these different sections. I'll close that, but that's my little life hack of just how to do that without having to download or pay for some crazy piece of software. So this is a zooming out exercise. The Wheel of Life is broken down into 3 sections. We have work, we have relationships, and we have health. Relationships isn't just romantic relationships, it's relationships with your money, relationships with how much you're growing as a person. It does incorporate romantic relationships and family, but it's not specifically romantic. So we break it down into health, work, and relationships. And the point of the Wheel of Life exercise is that you take some time to go through this wheel and you're scoring yourself out of 10, 10 being mission complete. If it's body, my body's a temple, I've got a 6-pack and I only eat kale. For me, a 10 out of 10 would be only eating carbs, but 10 out of 10 is mission complete, and a 0 is I'm unwell in this area. And so very, very often I'll approach a Wheel of Life, or I'll be in a personal development session or a mentoring session with somebody, and I might say, like, do you have anything specific that you'd like to set a goal or target on? And they say no. And then after the Wheel of Life, we're like, okay, well, we've identified like 7 areas that you could probably improve on. Let's like unpick those things. And I think the ones specifically for self-employed people are going to be the same. For me, it's nearly always friends. I don't prioritize friendships because I feel like time is my capacity and I just choose to work. I'm terrible at answering WhatsApps and replying to people. And so like actually my friendship part of my life has suffered as a result of being self-employed. Money is normally a big one, and it could even be and when you're scoring yourself, it's not money 10 because I have enough, it's your relationship with money. So growth, money, friends, mission, and mind are like very common ones that would flag up to you as a business owner. And again, the purpose specifically about budgeting is looking at really refocusing. You are not just doing a budget for the next financial year to carry on as you are and maybe try and increase your sales by 10%. Like, that's not what good budgeting is. The budgeting that has got our business to where it is today is actually by starting here and then working back from there. So just another really great exercise. Go around the wheel of life, score yourself out of 10. And what happens is once you've done all of those little dots, you draw a line between them all, and normally there's like a really clear section that is where you should be paying attention to. And so whether that is an area that you need to spend money in or spend time on, or even just Googling that area on the wheel of life and looking at what books are really great books to read if you score low or high in that area, I'd recommend doing that as well. I love a book. And then the final task that I'd like you to do, and this one will cut you deep, and I've actually never heard anyone else say this in a business setting before, but I think it's really important. As somebody who's hugely business focused, I love the business side of my life. I think it's really easy to measure success. I think it's really easy to measure growth. It's really easy to look at numbers and do it all in the metrics. But actually, the final thing that I'd like you to do when you're zooming out and you're looking at budgeting, we call it the eulogy method. And this is something that me and James force ourselves to do quite a lot, because as someone who's incredibly business focused, it reminds me and gives me an opportunity to think about me living the best and most wholesome and most fulfilled, very long life. So I'm 90, I'm very happy, all of my plans have gone to plan, and somebody standing up at my funeral and giving a eulogy. They're not going to say that I scaled a business that was worth loads of money, and they're not going to say that how many followers I had or how many inquiries my business received. Fundamentally, they'll talk about me as a parent, as a grandparent, as a friend, as a sister. And again, when we're thinking about business, it's so easy to just think about the business. But actually, if someone was giving my eulogy tomorrow, actually all of the things I'm focusing on are none of the things that they would say about me. And it's just another really good sanity check that actually, when we've got our whole lives ahead of us, we have a to-do list with 100 things that we want to do. Whereas when you're at the end of your life, actually, those people only want one thing, and that's to live a little bit longer. And so, sorry if that was a little bit triggering, but it's really, really important, because I feel like self-employed people all have a very similar personality type, which is we are going in this direction and we are not stopping until we do it. And I really, really want to encourage you all to stop and zoom out and change your state. Go on a walk before you do these exercises. Come back and do the wheel of life before you start thinking about the finances, because that is the most important. Just need to change what I've got on my screen. All right, so we've all had a good cry and we've zoomed out and looked at our life. Now we can get back to the numbers. So, which numbers matter in your business, and where the bloody hell do you start? I'm going to basically walk and talk you through some different reports that you can run within your business. So if you operate on accounting software, these are the reports that you can run on your accounting software once your bank reconciliation is up to date. If you are not on accounting software, not to worry. Your most recent set of accounts will have all of these reports in them, or you can just pop some time in your accountant's diary to have a chat with them about how to pull these specific numbers. So I'm just going to run you through report by report. Again, pay attention to the bottom right-hand side. So if I'm saying things like profit and loss and you're like, I don't know what that is, or just want some clarification, I've got long-form videos which explain the difference between the balance sheet and the profit and loss, and exactly how you can find those reports on different accounting softwares. So we're going to start with a profit and loss. A profit and loss within your accounts, we split your financial reporting into a couple of different sections. So we have a profit and loss and we have a balance sheet. When you put your profit and loss and your balance sheet together, that forms a trial balance. So your profit and loss is specifically looking at income and expenditure that relate to that specific year. So just income and just expenditure. Your profit and your loss, the bottom number, the difference between those two numbers, is the only thing that is carried forward year on year. So within the profit and loss report, we're looking at things that specifically relate to that financial year that are not going to be carried forward into the next. Your balance sheet is the opposite. So we don't look at the specific ins and outs of that financial year. The balance sheet is actually assets and liabilities that are carried forward year on year. So a really great example of the difference between a balance sheet and a profit and loss is income would sit on your profit and loss. So that's income that happens in 1 year that won't happen again. But actually, the money that came into your bank account from making that sale goes into your bank account, and your bank account does get carried forward from 1 year to the next. And so that sits on the balance sheet. So when we're specifically looking at the profit and loss report, and the purpose of this is to zoom out and look at what has historically happened before we use that to forecast and move forward, the profit and loss report is going to be able to tell you at a glance whether you're making money or losing it. And so in order to understand if you're making money or losing it, you're going to subtract your expenses from your income. And so I'm just going to go through a profit and loss, go through income and expenditure and different types, and talk about how we can look at that report and interpret the information to look at what's happening on a historic level. So when it comes to income, we're looking at how much money you are generating from the sales of products or services within your business. And we can analyze further income by splitting income into recurring income and expected income. So recurring income is going to be regular and reliable revenue from client retainers and contract work. I always feel like as an accountant, I have a very, very easy business model because my job is to keep clients very happy. And as long as I keep clients very happy, that becomes recurring revenue, which is revenue that I can bank on year on year on year on year. And as long as I'm keeping those clients happy, I can continue expecting that income. So recurring income is the thing that we'll want to pay a lot of attention to because that's really valuable when we're forecasting. And then if you don't have recurring income, or if your income is split into recurring income and sort of ad hoc income, that's then what we can expect to receive in income for the next 12 months. So that's going to be where we do some forecasting work on what your business is likely to earn. And you'll then see later on how this feeds into what if scenarios. So recurring income, we can generally expect it to stay the same or go up. But with expected income, it could be that we start with a worst case scenario, and then we say, what if we could multiply it by 1.1, 1.2, and 1.3. So with income, we're just going to split that into recurring income that we can basically guarantee, and then expected income that we think we're going to receive over the next 12 months, and look at how those costs have behaved over the last 12 months. And again, the warm and fuzzy questions I was asking you at the beginning, the reason it's really important to start with those questions is if you've been looking at your income and you're thinking, none of it's expected, I have loads of anxiety around what is expected, how can I try and convert that income into recurring income, retainer income, or passive income? That's why we start with, what do I want my life to look like, so that you can then apply that into how and when you're making money as well. So with your costs, in your profit and loss report, we're looking at how much money you're spending as a business on costs like staff, materials if you're a product-based business, and things like marketing. And again, as with income, it's really, really helpful to break them down into a couple of different sections. So the first is recurring expenditure. So that'll be things like your monthly payments for rent. If you've got an office space, it will be utilities, light, heat, electricity. Payroll is a really good example of a recurring expenditure that you can expect to receive. So once we've done recurring income, we'll then look at things that we kind of call sundry costs as accountants. So these are occasional payments for things like office supplies, client entertainment expenses. And I think with the sundry items, it's very easy to overlook some of those costs and think like, oh yeah, it was incremental last year and it won't happen again. And so with sundry costs, we really want to consider having a little bit of a financial buffer in any forecast for any sundries. And again, when it comes to overlooking costs, it's very, very easy to look at recurring expenses and stop there. And so I'm just going to run through things that people very often forget to think about when it comes to forecasting costs. The first is depreciation, which if you have an accountant, you can pull up your last year's set of accounts and you'll see a depreciation figure. If you expect to invest in more assets this year, you can ask your accountant how much you should be setting aside for depreciation. So with depreciation, business assets that you buy within your company, such as computer equipment or desks, or like I have lots of YouTube equipment, will lose value as they get older. And so as accountants, we put a financial figure in your accounts every year to account for how much of that asset should be depreciated. So for example, if I have a laptop that costs £1,000 and I think that will last me 5 years, I would want to put £200, which is £1,000 divided by 5, into my profit and loss as an expense every single year. And this gradually reduces your profit as the value of that asset reduces as well. So depreciation is a really good one. To get your depreciation figure, you can look at your last year's set of accounts and look at any changes that you expect to see in your assets, or you can ask your accountant and we can actually give you a figure based on your plans for the business. Overheads are a really important one. So it's really important to make sure that you don't overlook fixed costs for things like fuel or transport or anything that sits outside of recurring expenditure but is quite one-off. Payroll is a really big one that sometimes people find quite hard. So if you've done a quality of life audit and you think, I think I need a PA, how can we make sure that we're capturing payroll costs appropriately? And so the cost of employing staff isn't just their salary. And so it's really important to, again, if you do have an accountant, chat to your accountant about things like what insurances you might need, taxes, different benefit schemes, all of those things. I'm actually currently working on a bit of short form content, which is lots and lots of people love the like what I spent this week series, which is what I spend in my business. And we're actually doing a video that is specifically how much it costs to employ a member of staff, because there are so many bits that people don't think of. So if you were planning and you just put somebody's salary into your forecast, you won't have accounted for employer's liability insurance. You might not have accounted for the laptop that you need to buy, which therefore means that you need to increase your depreciation for the year. Any setup costs, because if you work remotely, it could be that they need a keyboard and a mouse in the office and a keyboard and a mouse at home. It could be that you then need a HR advisor as well. And so with payroll, just make sure you're zooming out and thinking about all of the costs that are associated with hiring people. And then finally, debt. So if there is any debt within your business, or if actually once you've done that quality of life audit and you've done a wheel of life, it could be that you really, really want to push the business. When you did the Odyssey plan, if money was no object, what would happen? If you then think, actually, I really want to invest in my business and take out a loan, really, really important to consider any debt repayments or regular outgoings to repay any loans or business investments. And so with your profit and loss, we're looking to establish the difference between recurring and non-recurring income and expenses, and then just making sure that we are doomsday prepping a little bit. So putting buffers in place for things like sundry costs, depreciation, overheads, payroll, and debt. If you do have more money coming in than costs going out, you're making a profit. And if it's the other way around, then you are making a loss. A loss is okay in certain situations, but losses fundamentally aren't sustainable over time. So if you have more expenses than income, there is a difference in cash there. And normally as the owners, we end up funding that personally. If you actually are doing cash flow forecasting or forecasting for the future and looking at things that have happened previously and you are making a profit, it's actually really important to not just focus on the profit, but also to think about what to do with it. So when you are analysing your historic profit and loss report and looking at what you'd like that profit and loss report to look like in the future, it's really important to have a think about what to do with any excess profit. So could you drive more profit in the future by reinvesting that cash into the business through things like marketing, working with a strategist, or like somebody that you'd really like to work with or have considered working with in the future, but maybe thought you couldn't afford it? So could you invest that cash into a different part of your business to make more money in the future? Could you save money by paying your debts down faster? Again, that's another really great question for your accountant. Or if actually when you're doing the quality of life audit and you're doing a wheel of life, actually it could be that money causes you anxiety in your life. And so actually you want to be able to have high reserves of cash within your business to ride out any future drops in revenue. And again, that's why it's really important to consider things like recurring income versus unexpected income. If your business is completely reliant on you constantly generating money as opposed to recurring revenue or retainer income, you would probably want to have higher cash reserves in your business than somebody who has recurring income. And so the reason we're doing all of these in the right order will all pull together at the end. So when we're zooming out, not only are we looking at the historical stuff, but we're also thinking about what that's going to look like with our future plans in mind. And we're going to do exactly the same thing for your balance sheet. Again, QR code in the bottom right-hand side if you want some more information on the differences between the profit and loss report and the balance sheet report. So your balance sheet report is going to tell you the difference between what you own and what you owe. So that's assets and liabilities. On the positive side of the balance sheet, you're going to be able to find things like the value of the assets that are owned by your business, such as your laptop, any materials, any equipment, or if you were a builder or a plumber, it could be things like your van and your tools. So we're going to be able to see the value of the assets that we own. We're then going to be able to see the cash in the bank, and we're then going to be able to see people who owe us money. So invoices that have been sent to clients but haven't yet been paid. And those are the business assets. And then on the other side of the balance sheet, we're going to be able to see expenses that have been incurred but not yet paid, such as bills from suppliers or tax bills. We'll then be able to see an overview of all of the taxes that are due to be paid in the near future. And then we're also going to be able to see any loans and business debts that you have. So whether that's an official loan or an unofficial loan, it could be a loan from the bank, or it could be a loan that you've put into the business to get your business started. So the balance sheet is going to show you your assets minus your liabilities. And then finally, your trial balance is another really useful accounting concept, which basically puts your profit and loss on your balance sheet together so that you can see all of the debits, all of the credits, all of the assets, and all of the liabilities in one single document. So in other words, that represents the entire balance of all of your business accounts. And so with all of that information at your fingertips, we're actually now ready to start creating our very first budget. So now that you've got all of your current financial information in black and white in front of you, we can now look at creating a budget. And it's going to tell you how much you can expect to make in the next 12 months. It's going to talk to you about how much money you can spend and giving yourself permission to spend, which is very important in business. It can tell you how much money you've got available to actually invest back into the business or invest back into yourself. And it can tell you how much money you can expect to pay yourself and any shareholders that you have within the business over the next 12 months. So the business is going to give you, the budget is going to give you a much better idea of what your cash flow is going to look like. And this will actually stop you running out of money and getting into any tight spots with anybody that you do owe money to. And your budget will also be able to give you insight into where you can make savings. So as I mentioned, going through all of those reports earlier, it could be that the thought of going through a P&L actually filled you with a little bit of dread because actually you might know that you are spending too much money within your business. So we're going to start with the fixed costs, and the fixed costs are any area of expenses that remain constant over time and don't dramatically change from week to week or month to month. So in most cases, these expenses are locked in by some form of contract, making it very easy to anticipate or account for them. This category will normally include things like expenses related to any overheads, so rent, payments, utilities, maybe a phone bill, software subscriptions can also fall into this category, along with any debt repayments. So this is any expense that is regular and expected, you would consider as a fixed cost. Really, really great way, if you're maybe not on accounting software, to look at what your fixed costs are going to be is to head to your online banking and go to the direct debits and standing orders section. That will literally show you a list of scheduled payments that are due to go out of your bank account in any given month, and normally those are fixed costs. With your variable expenses, and so the difference between fixed costs and variable costs is how those costs behave. And so variable expenses are those that your business is going to incur, which vary over time. And that variation will depend on a couple of different factors, including your sales activities, your shipping and distribution costs are likely to be higher during a period where you sell more than when you sell less. Again, things like utilities, gas, water will be higher during different periods for increased use. So it could be that for some costs, income is the driving factor, like shipping costs, or it could be that seasonality is the driving factor for other costs like heat, light, and electricity. This is especially true for businesses who actually make and manufacture their own products. We see those variable costs very, very high, whereas in service-based businesses, normally variable costs are quite low. So especially true for businesses who make and manufacture their own products. Maybe you have things like sales commission is a really good example of something that would go up when your sales go up, even in a service-based business. And again, things like labor costs. If you use freelancers to make income, it could be that your freelancer costs significantly go up as you make more money. Both fixed costs and variable costs can be recurring in nature, making it very easy for us to be able to predict them. And again, even if variable expenses, you think you can't project them, actually once we identify what drives them, then we can look at predicting them quite easily. So we've got fixed costs and variable costs, and we want to split them into recurring and ad hoc. And then we also just want to be able to account for any one-time expenses or one-time spends. And these are things that don't recur and don't happen, like they basically happen very rarely. So things like purchasing new equipment, developing a product or developing a service, hiring a consultant, handling a security breach, or like a sudden investment of cost that you are not anticipating, and just really understanding what it's going to take to overcome anything that you anticipate in the next 12 months, and what you've spent in previous years on similar unexpected expenses can really help you to account for them as well. Again, the point of all of this work is to look at how costs behave, how you behave, and actually fundamentally what makes that very anxious feeling that we get as business owners go away. And so if you identify that most of your income is recurring and most of your expenses are fixed, that could actually reduce your anxiety and increase your ability to spend money within your business, invest within your business. Or it could be that actually you're on the other end of the spectrum in that you find it quite easy to spend money within your business, but doing this exercise makes you realize that a lot of your expenses vary and you have little control over your income. And so actually you might want to keep your cash reserves quite high within your business. This is my favorite bit. And it's important to say when budgeting, there are loads and loads of different cash flow forecasting solutions. We move on in a second to how to ask for help and what working with an accountant to build a cash flow forecast or a budget or forecast looks like. But fundamentally, what we want to do is take the data that you've just sort of gone through. You'll have your income, you'll have your expenses, and now we can start doing what if testing. So once you've got the basic small business budget and what happened last year and what you think is going to happen this year, then we can start playing with the numbers. And so for most people, this is actually just quite a basic spreadsheet. If you use things like Xero or QuickBooks, use the same categories. So just download a profit and loss report for this year and just start changing numbers. And so we want to be asking questions like, what happens if sales go up by 10%? If you've got loads of variable costs, actually your cost will go up as a result. So we want to do what if scenarios positively and negatively. So what happens if sales go up by 10%? What happens if we lose our biggest client? What happens if we can negotiate on some of our fixed costs within the business? And what happens if my quality of life audit has told me that I want to be a digital nomad on a beach most of the time? Like, how can I get that to exist within my business? So once we understand how the costs behave, that's when we can start to have a play around with what that income looks like, look at how much control we have over the expenses, and then you'll have lots of different variables. There is no limit to how many what if scenarios you can present within your business, and lots of businesses use this type of exercise to find out when they can afford to hire employees, And again, you can do that too by adding things like payroll costs into your scenario and understanding how that affects profit. And I'd basically recommend doing this and creating several versions of the same budget to cover lots of different scenarios. So within our business, we basically have a break-even budget and then a best case scenario budget. Our entire team are targeted to hit 1/12 of our ideal budget every single month. So on a monthly basis, I know exactly where the business is in terms of on a spectrum between break even and our goal. I know exactly where we are. And so then I can therefore make sure that our spending is in line with the difference between the worst case scenario, which is just break even, and then the best case scenario, which is she's on a beach. And so I can work out where I'm driving the expenses in line with that as well. So your homework really is to analyze your income behavior, analyze your expense behavior, and then build several versions of the same budget to cover lots of different variables. It could be that you've got someone like a coach or a consultant that you've really been wanting to work with for a long time to get your business set up for success. What does that look like? How much do they cost? Could I book a call with them to see how much they cost, to put that into the budget, to see what I can afford? That'll then set me up to, in that meeting, ask that consultant, what results do you normally see with other people in their business? Do you find their income goes up as a result of working with you? In which case, that scenario would include the expenditure, but also an increase in their sales too. So I've spoken a lot about understanding how costs behave and focusing a lot on what you want, but actually there's a gap between the two. There is long-term goals and North Star, but there's also how we translate that into what life looks like in between. And one of the most common difficulties as business owners is having these, oh, sorry, I paused my screen sharing, I didn't mean to, is we have this disconnect between our really big audacious goals and the day-to-day running of the business. And I actually have a book recommendation, which I'm just going to put in the chat. If you struggle, firstly, setting long-term goals, but secondly, translating those goals into one really big thing. I'm just going to hit send in the chat. This is a book recommendation. It's a book called Traction, which really helps you to get a long-term grip on your business. It breaks your business and your goals down into 6 key sections of running a business, and it helps you to turn that really big rock that is your long-term goal into how to chip away at that and actually turn that into daily, weekly, and monthly goals that you could be ticking off to make sure that in 12 months' time you are hitting your goal. For me, Traction is biblical. It is literally a Bible. It's one of those books that I could read start to finish, turn it over and start again. It is a book that I will never, ever be finished with. But I just wanted to give you a book recommendation because I think for some people it can feel like there actually is a difference between that long-term goal and the budget and actually where to start. Rebecca's just put in the chat as well. I think that's 1,000,000% recommend this book as well. She's read it. And so before you get started on your budget, I feel like I overcovered this at the beginning, but it's really important to have a firm understanding of the goals that you're working towards, not just financial. And by really having clarity on what those goals are, you can prepare a budget that fundamentally aligns with them and facilitates them. And I can't tell you the amount of people that have booked a consulting session with me that's an hour to talk about something like hitting the VAT threshold, when actually I know that this is not about hitting the VAT threshold at all. This is about them being scared of breaking the VAT threshold, scared of changes happening within their business. They don't feel capable of actually sustaining a revenue over that. They think it must be some big mistake. And so actually it's really important to bridge the gap between where your business is right now and where you want it to be, which is why I hit you with the difficult questions as a starting point. So a really great example is if you consider a business that's regularly experiencing year-on-year revenue growth that is actually being offset by rising expenses, that organization might actually better benefit from focusing efforts on controlling expenses rather than trying to drive more income if their expenses just go up with income. Alternatively, you might have a business that's launching a brand new product, and so that company might invest more heavily into growing that business line to support the future growth. And so it could be that for the next 12 months, profit is not important, but investing in future profit is. And then I finally just wanted to have a chat about quality of life sessions. So these are sessions that I run with people to, once you've done the fluffy stuff, the North Star, you've read Traction, you've done your sorry, my brain just closed that tab. You've done your Wheel of Life exercise. If actually you've done that Wheel of Life exercise and you want to understand, this is how much I need financially, and this is how much I want financially, and I will push you to be bougie on what you want, because it's hard as a business owner. But fundamentally, we all become self-employed to make more money. But then lots of us struggle to have conversations about how much money we really, really want to make and what that looks like. And again, that eulogy exercise that I asked you to do, a lot of it isn't attached to money, but lots of it, for me, the ultimate form of like privilege and success is having choices. And lots of what people will talk about in your eulogy is dependent on the choices that you have in your life. So how much time would I have to be a great mum or a great sister or a great friend? Actually, money can help me to do that too. And so I host sessions that are an hour long that you can book, where we basically walk and talk you through how much you physically need to run your business, how much you want in your personal life, and what that looks like on a practical perspective. And so we do things like adding back things like corporation tax. We'll add corporation tax back, we add personal tax back, and then we'll also look at setting income goals. So once we've identified how your fixed and variable costs behave, we can look at, in order to, if someone came to me and said, I want to make 6 figures this year, profit, we could then work out, in order for you to take home £100,000, we need to add back on 25% for corporation tax. We understand your fixed costs and your variable costs, and therefore, in order to take home 100,000, your business needs to be turning over 200, profit of 150. We deduct corporation tax, account for personal tax, and that's how much you need. And then we would break that turnover figure down into 12 months, and then therefore we've literally given you, as a self-employed person, sales targets. So when we're chatting through, the little arrows just pointing to the chat, I'll pop a link in the chat, so that if actually, once you've done all of this stuff, you're thinking, I think I need someone to help me get to the point where my long-term goals are driving the finances and the forecast within my budget, you can just book in for a quality of life audit. My final thing before we move on to any questions is to remind you that we're not taught this stuff at school, and I really want to encourage you to not be afraid to ask for help. Setting a budget isn't complicated in terms of the numbers, but it can feel very, very complicated. And for lots of us, setting a budget, setting revenue targets, and looking at what's going to happen in the business for the next 12 months feels quite attached to how we feel about ourselves and our emotions. And so it's really, really important, if you feel stuck, to involve somebody who knows a little bit more than you, or even involve an expert like a bookkeeper or an accountant. So your bookkeeper or you're an accountant, if you're a client of ours, you can book up to half an hour with your accountant for free at any time. And so if you get to that point, actually, you can ask your accountant to just run through the numbers with you, double check the numbers, and really help you to make realistic predictions about things like business growth, upcoming expenses, any tax exposure as well. So if you're a client of ours, I'd recommend that if you are doing this, get to the point where you get to the tax section of your profit and loss, and then just book time in with your accountant to look at how you can incorporate tax into that planning as well. When you ask for help, people can also advise you on things like what to do if the numbers deviate from your predictions, and how to anticipate them as well. We have another toolkit, which is a session that we ran like this, on how to have a board meeting in your business as a solopreneur without talking to yourself. And so if actually this session is part of much longer strategy of how you can make sure the business is serving you whilst keeping control of your finances, the two toolkits that I'd recommend that you have a look at are how to have a board meeting and also financial well-being. I am gonna stop recording so that we can get stuck into some